Good morning, everybody. It's the 31st of March. Happy Friday, happy month end, happy quarter end to everybody. Morning, Steve. How are you doing?
Yeah, not bad, thank you, mate. No,
Good.
nice. Nice to get the end of another month, quarter, week. Lovely.
Yeah, indeed. Okay, so let's wrap this month up, shall we? Let's go through the latest headlines and through some expectations for today in terms of data that's out, and also look at the charts and see how things are shaping up for the month end. Okay, so the latest headlines, first of all, let's rattle through those. German inflation declined sharply as expected. We saw the rate decline to 7.4% from 8.7% previously, which was primarily due to favourable base effects after a jump in prices last year, and the figure was slightly above the consensus forecast of 7.3. We also see US jobless claims edge higher. This increased to 198,000 in the latest week from 191 previously, slightly above the consensus forecast of 196,000, while continuing claims were unchanged at 169 million, which suggests little net change in the labour market conditions. We saw strong Chinese services PMI data. The manufacturing PMI edged lower to 51.9 for March from 52.6, but above the consensus forecast of 51.5. This was well above the expectations and the highest reading in the non-manufacturing component, the highest reading since 2011. So that is encouraging. So risk appetite has strengthened across the board. We saw this yesterday. With reduced concerns around the banking sector, the Chinese PMI also helped underpin confidence in Asia on Friday with further gains in equities, and risk-sensitive currencies posted net gains while the yen lost ground. The dollar was mixed with net losses while it managed to hold just above 8-week lows. The Eurozone inflation data is due out today. Consensus forecasts are for the headline rate to decline sharply to 7.1% from 8.5% due to less favourable base effects, with a marginal increase in the core rate to 5.7% from 5.6%, and this data will be important for the ECB expectations. We've also got some inflation data from the US today, the latest PCE prices data, expectations that the core annual rate will hold at 4.7%, a lower reading would provide relief, while strong data would complicate the Fed task. And as mentioned, it's month end today, so there could be some choppy trading, especially around the London fix with month end position adjustments. So let's tackle some charts, Steve. Let's have a look at how things are shaping up for the day ahead.
No worries at all, mate. I'll get share my screen. I will dive into Bitcoin first, cryptocurrencies. Daily chart is really sort of like setting itself up for some sort of break now, where we've got this sort of channel formation, and we've got the highs, potential for a double top, obviously, and potential for the extension higher. We're running into this really solid band of resistance between here and the 32,500 level. That's the before, if we do get a break of there, then it really does open up the upside with the next projected target to be around about that 48,000 levels. So really a lot of work to do though before we even get close to that. So I'm very firmly in this as a failure and a turnaround, but Bitcoin is definitely a law unto itself, so I'm not going to lay my hat on it. Ethereum, the 1730 level is one of the key levels, and this provides the bottom of the band of resistance that we're seeing at the moment, the range. We've been getting up to around about that 1850, 1860 level, swing low down to the 1700, 1730 level, and trading inside there. The last couple of days have been really sort of like nothing to sort of write home about. A little bit of indecision with the doji candle posted yesterday. And yeah, although we've sort of like been positive overall on the week, only mildly positive, you can like see the weekly chart really hasn't really given us any direction whatsoever. So it's still within that channel of resistance, similar to the Bitcoin, but slightly above that level. The one bright spark amongst the cryptocurrencies that we look at is XRP. That's pushed above the previous swing high. It's got up to 58.50. The previous swing high was here at 55.83 and just poked our head above it and then reversed slightly. So we are in a little bit more of a bottoming formation as far as I'm concerned. This is the weekly chart, so a lot bigger time frame to consider. On the daily chart, however, this rejection that we got on Wednesday, yesterday's price action wasn't great. It didn't really try to battle back too hard to take out that high at the 58.5 level. So that shooting star formation is dominant at the moment. So XRP, although overall it feels bullish, there are signs of stalling there also. Taking a look at commodities, one of my favorite commodities to trade and look at is gold, and we are trading within a symmetrical triangle formation after this extensive move higher. So really looking for this overall to break higher. However, triangle formations, especially symmetrical ones, can, give you the produce the opposite as well. Normally what we do see is a false break first, and then the reaction. So we could get a false break higher, then the sell-off. But as we're quite close to the all-time highs, that is something to consider. However, with this week dollar that we're seeing still languishing around this 102 level on the dollar index, there is potential for that to weaken further. So maybe we are going to get that extension higher, and that would lead to a potential retest of the all-time highs at 2075. Currently trading at 1984. Resistance coming in from the top of the symmetrical triangle at 1993, and support down at around 1959. So definitely one to watch, and I'm sure we'll get a little bit of volatility as we see this position squaring into the end of the month. Crude oil, bullish day again yesterday. It's been a great week for crude oil after it's just one-way traffic, really. Although it's slowed, momentum has slowed. We got a little bit of a reversal on Wednesday when all the inventories came out, but that was shrugged off on Thursday, pushed higher, and we're now really, well, let's stick a Fibonacci on here, and we're close to the 61.8% fib now. So a little bit of resistance probably coming in towards the end of the week. But as I said, Friday, who knows what is in store for us today. The premium between Brent crude oil and WTI crude oil has reversed slightly. The premium now around about $4. We have been out to over $6 in recent months. So that's coming back sharply with the premium narrowing. That's the levels to watch really on here. Again, we've got similar sort of price action. We're a little bit of away from the 61.8% fib, more closer potentially. We're just above the 50% fib, so a little bit of a way to go. Resistance really coming in just above the $80 level in Brent crude oil. Natural gas remains pinned to the low. 210 is the support level. Below that, price action really opens up. And let's take a look at the weekly chart to give you a little bit of an idea of where we are. Really, the sort of like next milestone is around about the 155 level, and if we do manage to get a break and a close below that 210, I think that could be a real possibility over the coming days. So watch out for that. Natural gas really under pressure again, and really cannot drag itself away from this low at the moment. If it did and it managed to get above the 306 level, then we would be posting a double bottom. But as I say, under pressure throughout the week and today as well. So yeah, watch out natural gas. There's a big gap below. Joe, let's take a look at FX before we dive into the indices.
Do that. Okay, a couple of requests coming in already. Going to be taking a look at Euro Yen and taking a look at Dollar CAD. But before we do, we'll just rattle through a couple of the majors. So let's take a look at dollar index to start with. And we can see here that it's hanging around kind of 8-week lows on the dollar index. We've still got this unfilled gap at 102.83 that's still not been filled. And yesterday we can see that it was a pretty negative day. So we engulfed all of the gains that we posted in the previous session and found support at this 50% fib level, which has done a job over recent weeks. That comes in at 102.15. And why that's relevant, let's just scroll back to the left-hand side to bring the whole move into focus. So that Fibonacci level is actually from these lows that we posted in May 21 to these highs that we posted in September 22. So the 50% line is here. We can see it did a bit of a job at this occasion here. We then completed this kind of wedge formation higher before breaking down. And again, that 50% level seems to be doing a bit of a job. So where next for dollar index? Well, if this is going to form some sort of bottom, then pretty much we need to see something happen soon. If we do a shorter term fib level, we can see that this also roughly marries up with a 78.6% fib level, this move higher here. So we're into that pullback zone now. So if the buyers are going to step in and complete a bottom, we kind of need them to do it pretty soon. Otherwise, we're going to go and challenge these previous lows, and at which point it's going to invalidate any kind of potential bottom setup. So be interesting to see what happens. For now, it seems to be holding, but we've got month end factors to consider as well. So maybe there'll be month end buying today in favor of the US dollar. Let's take a look at euro dollar. And again, we can see prices are attempting to break through this 78.6% fib level. This move lower here has retraced by 78.6% at 109.22. We can see a couple of wicks here where the price has attempted to break through, but it hasn't quite managed it. Yesterday was a pretty good day indeed. We've got US inflation data out today, and we've also got Eurozone inflation data as well. So it could be a pretty choppy session for this to end the month, potentially, given that we've got these numbers due out today. So while it's kind of hammering into this level here, the potential for me is that maybe it could drop lower. If we see a clean break through this level on the charts, then it looks like we're going to go and target these previous highs at 110.32. Let's take a look at cable. We can see this is again challenging this major level of resistance here. So we saw two touch points at this level between December and January. We then moved down to almost complete a double top pattern. In fact, we did. We closed below the neckline on the 7th of March before then roaring back. And it's been pretty much one-way traffic ever since. So we're now back towards this level again. So a big range in progress at the moment. Is this going to cap the upside again? Well, looking at today's candle so far, although it's very early in the session, we can see we have attempted to move to the upside, but then pulled back a little bit in recent hours. So let's see how things go today. It may challenge these previous highs at 124.47. Be looking for a clean break above that. A close above it on the daily basis would be enough for me to maybe change my tune on this and think that we are going to continue to see dollar weakness and sterling strength. But for now, that's a pretty significant level that we need to try and get through. Okay, let's get on to the request then. So let's take a look at euro yen. This is a really interesting one highlighted by Lompra. They helped me out yesterday with euro CAD, which was much appreciated, and highlighted here on the chart that we've got this downtrend resistance line, and we've failed to close above this level now for a significant period of time, really. Going back to October earlier this year, we can see multiple touch points in this area here. Yesterday, we made an attempt at trying to break through it, and also this previous swing high, but failed to do so. And if we look at today's price action, we actually took out this swing high from March the 2nd, but then have declined pretty sharply below that to form what may be a shooting star candle. So that's a pretty big rejection there. And if we continue to close below this downtrend level, then that may signify further losses in the short term, indicating euro weakness and a bit of strength from the Japanese yen. Of course, we've got this inflation data due out today, so we need to be mindful of that. That could change the picture substantially in the short term. Looking at the intradays, I was also noting that on the hourly chart, according to this Elliott wave setup, that we had completed a 5-wave up pattern and potentially now in the form of forming a corrective move lower, an ABC correction. Potentially highlighting this as maybe another gun to the head trade today, just because it is into such a huge level of resistance. And we can see here this previous high from when was this? 2nd of March, that potentially we've formed a swing failure, and that could indicate lower prices as well. The volume point of control over the past month is pretty much where we're trading at the moment. So it's pretty much where the month average has been. So let's take a look next at dollar CAD. That was requested on YouTube. So let's take a look at that on the daily first of all. So prices look to be quite range bound, sort of lower end of the range, coming in around 132. 40 to 132.73. We rallied into these resistance levels here, these blue lines that we can see, which we scroll back to the left hand side, we can see why they were relevant. And then we formed this kind of wedge pattern, which looked as though it was at one point going to break to the upside, which it never did, then broke to the downside quite sharply. So let's just clean this up a little bit. In fact, let's just get rid of all drawings and start again, shall we? So what I was looking at here, given that we're in quite a sharp corrective move lower, is trying to find out where this will maybe stop using the Fibonacci level. So we've got 61.8% fib level here at 134.91. I would also target this high here prior to a big impulsive move higher as a potential support level, which comes in at roughly the same area. If we take a look at the intraday charts, I think this is where it maybe gets a little bit more interesting. And I think this is probably why our viewer has highlighted this, is because we can see that it maybe is breaking out of a bit of a wedge formation here. We can see price action has been pretty narrow. Let's just get rid of these for the time being. And yeah, it looks as though it's breaking out quite nicely to the upside here, following a sharp decline. So this could trigger some decent gains in the short term. So I'm not against the idea of going long on that at the moment, given that also dollar index is trading at pretty significant support. So yeah, good spot there. Think it looks pretty good maybe for a continued push higher. I also like the fact that it's month end and there could be some dollar buying to close out the month. So that would work quite nicely. So very good spot. Okay, let's take a look at Japanese sterling versus Japanese yen. So like what we just saw with euro yen, we hadn't seen a break for a while, but on Wednesday, we did see a pretty decent break higher through this level, and since then prices have continued to move higher. Now we are approaching a 61.8% fib level. We've also got this previous swing high that was posted on the 28th of February. So again, a month-end move there. So we can see that on the last trading day of the month, there was a decent move to the upside in sterling, but then yen fought back. Are we going to see a similar sort of candle today to end the month? It's definitely possible. But yeah, we look to be rejecting, close to these resistance levels at the moment. So that may trigger a bit of a pullback. All in all, I have to say, I think that's going to look quite bullish given that we've got the break of trend there. So any pullbacks, I think, could be limited towards this kind of region here around 161.77, at which point I'd maybe consider maybe re-entering from the long side, looking for a bigger move to the upside over the longer term. So short term, looks as though we may be in for a spell of weakness just to correct some of these gains that we've seen in the last week. But sort of more medium term, I think buying into dips is probably the preferred strategy there. Okay, let's, what else have we got? Euro sterling. So let's take a quick look at that. Pretty choppy stuff. No real change here. It's quite a difficult market to trade, actually, I think. So arguably we're trading in, a big triangle pattern or a bit of a wedge. Really difficult to call either way. So I'm not really sure what to say about this, if I'm honest, Ali. It just looks pretty choppy and pretty messy.
Yeah, it looks like no man's land at the moment, Joe, doesn't it?
Yeah, so I mean, let's just take a look at the sort of longer term charts to establish a bit of a trend. We can see here that ultimately prices do appear to be moving higher, and therefore that would be bullish for euro over sterling. But I think what we need to see now is a breakout of this kind of triangle pattern here. Either it's this kind of flat bottom triangle or the kind of symmetrical one that's maybe forming here. A break to the upside would indicate higher prices in line with the trend. Of course, if we get a break to the downside through this 87.21 level, then that could trigger losses back down to these swing lows here that we posted in December at 85.47. So it's a watch and wait on that one for now, I think. I think that's it for the currencies.
Yeah.
Yeah, no more further requests.
We did sterling yen, didn't we?
We did, yeah.
Yeah, you did EuroCAD as well. So yeah, that's it.
Okay.
We'll take a look at indices now.
Sure.
And let's start with FTSE, as we normally do. And FTSE's had a really, really decent week. Let me just show you the weekly chart and sort of what formation Candlestick formation wise, it's a morning doji candle formation. You can see that doji candle from last week's price action. This week's price action has really almost recaptured the gains of the week of the 13th of March, which saw significant losses and breakdown. We have reacted higher, and it's been really positive for FTSE. We had one minor down day, which was Tuesday, turnaround Tuesday, but that was quickly eaten up by Wednesday's positive price action. We've taken out the swing high from last Wednesday as well, Wednesday 22nd of March, which was around about the 76.30 level. Sorry, that was about the 7600 level. The 76.30 we're trading now, and we've been up to this level a number of times as well. We can sort of like take it back to these two daily candles, the 14th, 15th of March, and we're testing that resolve again. Above here, we've got 7706. So really around the big round numbers, 7600, 7700. And yeah, the major one really above that would be this 7850 area. DAX continues higher as well on the similar sort of price action on the weekly chart. This like reversal formation that we saw has, and we can see it more clearly. Again, Tuesday was the only real the sort of damp day on the blotter for this week. We saw price action engulf Friday's losses on Monday. Tuesday quiet. Wednesday really kicked on, took out that resistance level from the previous week, from the previous Wednesday at 15,303, and really nice extension higher. And we're looking to target the real major resistance levels in DAX, which come in just above the 15,700 level. So that is, it seems to be free flowing at the moment. Everyone really happy and squeezing that price as much as they can to the end of month to make their books look a bit better, I imagine. Although they shouldn't be manipulating the market like that, I'm sure. But we have regulators to check on that. The US 30, the Dow, also broken through that Wednesday's high, the Wednesday swing high that we got, and the failure, that the bearish outside candle that really sort of like knocked last week's price action. That was came in at 32,776. That's been taken out. We're trading above there. Next real resistance level would be the swing highs from the 6th, 7th of March. That's all the way up at 33,500. And again, just feels pretty secure and feels pretty strong as we enter the final day of the month and quarter. Nasdaq has taken out that high we were looking at. We had highlighted around about the 12,894. Now I don't know why. Oh, was that was a measured move target as well, potentially from this, from one of these double bottoms, maybe from this double bottom here. But overall, we've got a bigger measured move target from this major double bottom formation. That would, let's draw it on there. So talking about it, let's just take it from there. That sort of takes us up towards them swing highs at 13,700. So that's, again, one to watch. We've had nice constructive breakout, bottom formation, broke higher, came back, retested, went below what we could call a neckline, and now extending higher quite aggressively, really looking to target this area, especially as we've broken above this major level of resistance. Now, if it can continue, great. Let's see how it plays out. S&P hasn't been quite as aggressive, but it's in quite a positive bullish channel formation. Also, remember, I highlighted on the chart yesterday, there's a bit of a test coming up for this downward trend in resistance in the S&P futures. This is coming in around about the 4,100 level. So a break and a close below, above there on a weekly or a daily basis could lead to some fireworks. But at the moment, the channel is quite established. We've had 4 touch points on the bottom of that channel, and really looking for that to extend higher. The top of that coming in today around about the 4,090 level, where that resistance is. 4,077 is also a 61.8% fib, so that's quite key. That's probably it as far as I could see on the indices. Is there any other markets asked for, Joe, on the
Yeah,
FX?
a quick look at Aussie yen. So it appears as though yen currencies are kind of where it's at today. There appears to be some decent moves out there that are attracting plenty of interest. So just a quick look at Aussie yen. So I drew a head and shoulders top pattern on this some time ago. We broke down through that neckline in December. We then saw a retest which actually overshot the neckline and traded within this kind of corrective channel formation, as you can see here in yellow. Now, we saw then prices break down, eventually trading in a pretty kind of narrow range here before then breaking up. We can see the support that it found was this previous high that we posted back in October. So we broke through that resistance level, and now that's retested as a support and did a pretty fantastic job, to be honest. But all in all, for me, we are trading in a downtrend in Aussie yen, so therefore my bias will continue to remain on the downside. If we take a look at the daily setup today, we can see that following this corrective move higher, we are posting a bit of a reversal. So we've seen prices already move higher towards sort of 89.68 and now reversing quite sharply on the intraday basis. So potentially triggering an opportunity to go short. If we take a look at the intraday charts, we can see here there was a previous swing high from the 17th of March, which we rallied into this morning and failed at. We can also see a really narrow bullish channel that has formed here. I have had to cut through some price action around the 28th of March just to make this fit quite nicely. But potentially if we get a breakdown through this today, which we look to be doing at the moment, we've still got half an hour left of this candle, then that potentially could spark some further losses. So yeah, I quite like that today as well, given how the shape of the candle is looking on the daily. Obviously, there's a hell of a long way to go on the day, but looking at it on the intraday charts, it looks like it might be setting up quite nicely. So that may even be a bit of a candidate for the gun to the head trades today, Steve. So
Oh,
yeah, let me
nice.
come back to that in a minute. Okay, let's take a look at the gun to the head trades ideas then. So anybody new watching, Steve and I both picked trade ideas live on the stream. This is going onto a live account. We've got £2,000 in a trading account, which we started with at the start of 2023. So this is just a bit of fun. We come up with stops and targets for each of the ideas that we formulate on the day. Risk reward ratios must be better than 2 to 1. That is a non-negotiable. We must always look for risk reward ratios better than 2 to 1. If the trade ideas don't hit the stop or the target prior to 9 o'clock UK time, then we close the trades automatically. We don't want to carry any overnight risk. We don't want to incur any costs for doing so. So we exit the trades at whatever the price is at 9 p.m. and then we move on to the next day. So in terms of risk management, we also risk 1% of trading capital per trade. So around 20 quid, basically each. And we see how they play out between now and 9 o'clock. And we also publish them to our TradingView accounts. That's signal_center. So yesterday we had a trade on Euro CAD, and Lompra was actually pivotal in sending me down this direction. And if we click the play button, we can see here that it was a nice win. Come 9 o'clock, it was 1.2R on side. So that will do very nicely. I was looking for a 2.32R return on that ultimately, but at 9 o'clock, it was closed out for a win. Steve, I don't know if you can show us your chart because you didn't post yours yesterday, which is
I know,
problem.
sorry, I didn't post it, but yeah, this is what we started off around about that 1967 level. I put the stop very well, just above that 1955, which was the swing low for the previous day. It didn't go much against me, 1964, and then projected higher, and we've stalled around 1984. So yeah, again, had a bit of a win in that. I was looking for 2.4 to 1, so I think I got just over a 1R win. So
You did.
yeah, quite happy. Yeah, I think we could take a look at the. Oh, look at that, Joe. We made 46 pence.
No, it's been a lot of graft for 46
since
pence.
since the start of the year.
Yeah.
Now that might not seem like a lot, but you know what? That used to be able to buy 46 aniseed balls, or 46 blackjacks, or 46 gobstoppers. Lots of like penny sweets that could buy,
Yeah.
and we sort of hopefully provided some entertainment as well, which sometimes is priceless. So just remember that. But yeah, let's try and take this as a end of the quarter. What a waste of time. Next quarter, let's kick on, or let's
Yeah.
get off to a good start for the next quarter. Maybe, I don't know.
Yeah, let's
But
try.
Yeah, let's try. Why not?
I mean, hopefully it's
Hope
been educational and a bit of fun, but also highlights what trading's like. It isn't all glamorous and easy to do and make loads of riches. It's just if you're only trading with small amounts, don't have huge expectations. Just try and formulate a strategy that's consistent, and I do believe by the end of the year we'll be quite nicely on side. And as a percentage gain,
I
I
love the
think it will
optimism.
be
Yeah.
it will be more than acceptable. Certainly better than you'll get in any kind of savings account or any other kind of low bearing interest.
Yeah, like we,
Whatever.
we want it to be inflation busting. That's what we want.
Yeah, if we can get above inflation, that would be great. Okay, Steve, what you got today? Anything?
No idea, mate. I've got
Right,
no
let me
clue.
just
I'm
jump
actually
in then.
thinking about just cutting now. Should we just cut and run?
Yeah, we take our 46p and run. Well, we've actually lost money with inflation in that time, so let's not do that. Right, Aussie yen I'm going to go with. So Max highlighted this to me today on the TradingView chat. I really like it, so I'm going to go with it, and I'm going to keep my stop quite tight as well, assuming that we're going to break down from this channel. And therefore, any retests I hope will be limited to around 89.60. So I'd like to sell this at market, Steve.
Yeah.
And I'd like to have a stop loss at 89.41. If you want to be a bit more sensible, then you'd probably go with a stop above the high, which is at 89.73. But I'm going to go a bit more aggressive. And in terms of a target, let's have a look at some fib levels from this channel. So let's go for the 61.8%, which comes in at 87.44. Well, it's about 3-to-1 risk reward.
Right, give me the stop again.
Stop is 89.42.
Okay. 2.88 to 1, 2.89 to 1, 2.91.
Yeah,
Is
okay,
that
with a
right?
bit of cost, that's probably about right. Yeah,
Okay. You're on, Joe.
cool. So we can see that on Steve's account, trade placed. I'm going to get that published up onto the profile as well. So if anybody wants to follow it throughout the day, feel free to do so.
Yeah, I'm going to try and do the same. Apologies for yesterday. I hate it when I don't post it, especially if it's a winner, chicken dinner. Gold, I was looking at going for gold again, but we are sort of like middle of the road, and I tried that last week, and this start of this week, it didn't work. I was like, yeah, let's wait. Maybe a bit more of a pullback would be worth getting long of gold. I still feel quite bullish towards it, so that was one I was looking at. The other one I looked at, I started to dip my toe into cable. Now, forming a bit of a shooting star on that candle. We looks at, and also the 4-hour candle, nice shooting star formation formed here. Looks to complete at 10 o'clock, so still got a little bit of a way to go, so I'm preempting it, but I've got a gun to my head. Also, in the last short while, we saw this nice shooting star candle from the 2 o'clock price action last night. It seemed that's when everything seemed to turn around a little bit from the market's perspective, and we've also got this really nice bearish outside candle here. So I'm going to go short of this. Let's see where I can get in. Sell. We're going to risk 1%, and we're going to look at, maybe I could put even the stop just above this candle. That's 124.05, and target a move potentially down to I actually pressed the button. Didn't mean to press the button, Joe. I actually pressed the button to enter the price, and it did. So
They've
now
done
I'm
a
going to leave
sell
it.
limit. That's a sell limit. You're
Oh,
not
sell
in.
limit. No. Okay. Right. So should we cancel that trade?
Yeah.
Cancel order. Yeah. I was wondering why it sort of like actually went bang. I'll show my absolute experience here on taking on any sort of platform or market. I was wondering why the actual price action didn't sort of like marry up to what I was expecting. So 123. I need to go a little bit lower than that. Maybe need to have the stop a bit tighter, Stevie boy.
Nearly, Steve. Nearly risked too
Oh, that's
much
2
there.
to 1, 2.04 to 1. Yeah, I nearly did it. Nearly did it again. So yeah, I'm looking to target a swing back lower here.
Yep.
I mean, it's quite a decent candle actually to be getting in. Well, decent in terms of it's had a decent move, so not the ideal point. We're sort of back down to these swing lows, so I expect maybe a reaction higher. But I'd like to get short of this, so hopefully this candle has been quite defining in the rest of the trend today. But like you say, plenty of price action to come. Yeah, looking to target a move to 123 the figure, stop just above 124 the figure.
Okay, good luck. Right, what's going to move these trades today? Well, we know month-end factors are going to play a part, but also we've got Eurozone consumer prices due out at 10 o'clock UK time. So that is the latest read on inflation. We are expecting that to drop quite considerably. If we go and by the German numbers yesterday, we saw that they came in lower, but actually slightly higher than consensus forecast, but still risk appetite looked pretty robust across the board. So let's see what happens there. 1:30 UK time, we've got the US PCE prices index. And then next week, we start looking forward towards the next raft of data. We've got employment data at the end of the week from the US and also the Canadians. There will be other bits and pieces in between. And also, we've got earnings season next month as well, which could be quite pivotal for the equity markets. So let's leave it there, Steve. Hope everybody's had a fantastic week and has a fantastic weekend. And we will catch everybody on Monday.
Brilliant. Thanks. Cheers,
Cheers,
everyone.
guys. Bye.